Hey everyone, and welcome to This Explainer. I am so thrilled you're here today because, honestly, we're going to unpack something truly fascinating. Today, we're deconstructing the wealthy mindset. We want to see exactly how the affluent treat their money completely differently than your average saver. It is a fundamental shift in perspective, and it's literally what separates those who merely save from those who build lasting multi-generational wealth. And the best part? It's not about being a mathematical genius. It is entirely about how you view the dollars sitting in your bank account right now. Okay, let's dive into this. Here's our roadmap for today. We'll start with number 1, the silent wealth killer. Then we'll explore the wealthy mindset shift, look at where the money goes, unpack the incredible power of compound growth, and finally, define the true purpose of cash. Let's get right to it. Section 1, the silent wealth killer. We're taught from a really young age that cash is safe in a vault. And, well, yes, cash is technically safe, but safety doesn't always mean growth. It won't just vanish overnight. But imagine waking up tomorrow morning, checking your bank app, and discovering that every single dollar sitting in your unspent savings is suddenly worth less than it was yesterday. You didn't spend a dime. Nobody hacked your account. But somehow, you are definitively poorer. Why? Because while you sleep, a hidden, silent force is constantly at work, just chipping away at the foundation of your savings. That force, of course, is inflation. Let's put this into perspective. Picture this, $100,000. Imagine leaving that sitting in a savings account, completely untouched, for 10 years. Let's say during that decade, the economy experiences an average inflation rate of roughly 3% per year. Fast forward 10 years. When you log into your account, you are still going to see $100,000 staring back at you. But unfortunately, that number is a mirage. Its actual purchasing power has been severely reduced. So what exactly happens when purchasing power drops? Everything shifts. Food costs more at the grocery store. Homes become way more expensive, putting rents and mortgages further out of reach. Healthcare rises, and education gets pricier, demanding a much larger chunk of your stagnant capital. Basically, your cash is shrinking while the world gets more expensive. Your money simply buys less of the exact same things you need to survive and thrive. Which brings us to Section 2, the wealthy mindset shift. Now that we've really established the harsh reality of inflation, I want to ask you a question. Just pause for a second and mentally answer this with total honesty. If you suddenly received $1 million today, what would you do? Maybe it's an inheritance, a lottery win, or you just sold a business. What is the very first thing you'd do with it? Well, if you're like the vast majority of people, your immediate instinct would be to place it directly into a high-yield savings account just to keep it safe. But the wealthy, they operate entirely differently. Think about the average mindset. How can I protect this money? That's playing defense. Versus the wealthy mindset. How can this money produce even more money? They immediately go on offense. The wealthy rarely hold large amounts of idle cash because they view it completely differently. To them, cash is absolutely not an investment. It is merely a tool. So, the crucial point here is this idea of money as an employee. This is a financial strategy where each dollar is assigned a job and expected to generate future income 24 hours a day, 7 days a week. Wealthy individuals look at every single dollar as a worker. They definitely don't want their employees just sleeping in a bank vault doing nothing. They focus entirely on acquiring assets that grow, rather than holding on to cash that inevitably shrinks. Moving on to Section 3, where the money goes. So, if they aren't hoarding cash in a vault, where does the wealth actually go? Well, instead of a vault, the rich build a diversified wealth engine across different asset classes. Take stocks and index funds. The primary benefit is that they historically outpace inflation. Real estate gives you both monthly cash flow from renters and long-term property appreciation. Then you have businesses, which provide scalable, ongoing income production. And finally, private investments, which carry high long-term return potential. These are the assets actually doing the heavy lifting. All right, Section 4, the power of compound growth. Now, knowing what assets to buy is really only half the battle. What's genuinely amazing is the mathematical reality of exponential growth. Think about the compound growth of $10,000 at 10% annually. In year 1, it's a modest gain, but by year 10, and especially by year 20, that curve absolutely skyrockets. Why? Because your returns begin earning their own returns. Your money makes money, and then that new money starts making money too. Over decades, the effect becomes absolutely enormous. And that mathematical reality brings us to this golden rule. Time matters more than timing.
People constantly stress out about buying a stock at the exact right second or waiting around for a housing market crash. But wealthy investors know that the earlier the money starts working, the more powerful that compounding curve becomes. This is exactly why the rich buy assets and stay invested for years and decades, rather than constantly trying to day trade or buy and sell in a panic.
Finally, Section 5, the true purpose of cash. Now, let's be totally clear. This doesn't mean you should have $0 in your checking account. The wealthy do still hold cash, but they use it strictly as fuel. It serves three main purposes. 1, emergency protection, like when the roof leaks. 2, covering your daily expenses. And 3, as dry powder for investment opportunities when markets decline. Cash is highly useful when you need to start the engine or keep the lights on, but the fuel tank itself is not where long-term wealth is actually created.
Which brings us to our core thesis. Average people work for money, but the wealthy build systems where money works for them. Building incredible wealth is not about having an off-the-charts IQ or just being born lucky. It is almost entirely about how you think about your money. Cash provides short-term security, sure, but only assets create long-term wealth.
So don't just save your money, learn how to make it work for you. If you want to change your financial future, you have to change your behavior today. Don't just watch your savings slowly evaporate from inflation. Take the time, do the research, and put those dollars to work. So I'll leave you with this to think about. Take a hard look at your own bank accounts today. Are your dollars sleeping or are they working for you? Thank you so much for joining me on this explainer, and I'll catch you next time.